clearly seeing, on a broad basis and driven predominantly by domestic demand and job creations, a strengthened recovery taking hold throughout the euro area. This will probably lead us to slightly revising upward our projections and our forecast for 2017-2018 as far as the euro area is concerned. So significant improvement and clearly, as I said, broad-based, domestic demand-driven, and likely to increase our forecast. And we see that very much as a virtuous circle that is supported by a revival of credit, as we have seen lately. Second point, in addition to that economic recovery, which we're seeing, we are also clearly seeing a new political reality, which combined with the economic recovery is creating a climate of confidence, which we believe, as IMF, is conducive to a strengthening of the architecture of the euro area. Pierre has just mentioned three of the components that we are strongly suggesting. Number one, completion of banking union with a deposit insurance scheme that would be common to the entire euro area and which is still missing. A fiscal backstop still missing. So that's number one. Number two, a common capital market, which we believe will be encouraged by Brexit and by the repatriation on the continent of some of the activities that were conducted in London, for that matter. And third, a common fiscal capacity that would really correspond to a true, not only monetary, but also fiscal union that is also lacking. For the banking union to prosper, clearly the moral hazard issue has to be addressed, and we believe that a thorough and very deep treatment of non-performing loans in some of the euro area countries is a necessity, and so is a strengthening of the supervision and the provisioning principles applicable to such loans in general. For the moral hazard as far as the common fiscal capacity is concerned, we believe that the rules, particularly the fiscal rules, have to be complied with and more respected than they have been recently. So those are the good news, and I would like to finish at least with a little bit of the medium-term challenges that we are seeing on the horizon, because if we are seeing a broad-based recovery, we're also seeing that the income convergence within the 12 initial members of the euro area has stalled. And clearly that is creating the frustration of those middle-class citizens of some of those countries that are just wondering where the income increase promise has gone. Second challenge on the horizon, the differences in competitiveness between countries that has widened in the years after the euro adoption and remain wide despite a difficult adjustment that have led to employees losing their jobs over the course of time. And clearly that requires that specific effort be made by countries on a country-specific basis, where we believe that the countries in a deficit position should clearly use the recovery moment to deepen their structural reform, to implement those that they have committed to deliver upon. Whereas, as far as the surplus countries are concerned, they should certainly focus on trying to stimulate investment. And for some countries, and I'm thinking here of a country like the Netherlands or like Germany, which are clearly in that position, where clearly wage increases would be most appropriate. And that would hopefully help in increasing inflation that we are seeing at relatively low levels, certainly below that expected by the ECB to actually change its monetary policy in the near future?